Good afternoon and welcome to the FX Daily Roundup. And we are seeing the cable move up a little bit higher here. 2868. Let me just go in and check what we have. Our bias chart resistance.
President Trump in his speech just saying that the corporate tax rate could go lower.
Okay, I guess you heard that. Trump saying the corporate tax rate could go lower. Cable, I've got 2875 as a resistance here, our bias chart resistance. We are, after crude broke down, after the S&P rolled over a bit, we're coming into a trend line here on the 30-minute here, bumping up against right there at 57. Some key resistance coming in around 57.10-ish if we were to pop above it. But of course, right now, speech is coming on, you know, Trump could wing some things. Now, there isn't no mention about things with China, so market probably showing a little bit of disappointment at this point. Bear with me. Also, another movie here is on the dollar peso.
Saying that does not expect rate cuts to make a big difference in investment.
So we are above that 1923.6. I did mention in the room levels ahead are going to be 1928 and 32. We could get a stretch up to 35, but once again, like I said, we'll see how this plays out. One of the things that Dale has mentioned on the FACE webinar is that, hey, look, because we haven't broken lower to new lows in peso, new lows on this recent move is suggesting that maybe the upside, you know, for equities is in the U.S. is limited, although we've continued to make new highs. We made new highs today. But like I said, we are seeing things like that. The dollar yen just simply wants no part of this moving up higher here. We'll go on and take a look there on that. And we talked about that repeatedly. You know, when you look where equities are, we should probably see the dollar yen closer to 111. And we simply, you know, not to say that it's supposed to go to 111, but it's, you know, like I said, I mentioned yesterday about the old 90s song, the things that make you go, And my take on this is, yeah, if we got the China deal, you'd see the stops pop. But it just suggests that even though the equities continue to move higher, the dollar yen just simply doesn't believe the story. So we could see a situation where if they do agree on phase one deal, they get it signed, the rally, and we would see a rally, may be rather short-lived and at the time may also be vulnerable. Once again, it doesn't mean, hey, go in and sell it right now, but it's just something. This is the one pair I would be keeping my eyes on any China deal because it's the one that just doesn't want to go along with it. And so if it does, we hit these stops, my guess is they won't, you know, the rally won't last that long, and they could be a telling sign as to where equities end up, you know, potentially running out of gas here. Dollar index, we did get this minor resistance level at 98.41. Again, we had that from last week actually, and with the dollar index, we did negate the downside move last week after closing above 97.89. But it doesn't go full bull on until we get a daily close above 98.65. That's 98.65 here on the cash dollar index. So we're just touching off on these. The week started out very slowly, you know, yesterday, and so there was really no changes in analysis for most of the pairs. We are seeing here with dollar CAD making this move up in here. Our bias chart resistance for today was 32.69. We think the market can get there to 33.09, but a pause at 32.69. Looks like we paused just right before 32.60. You can see right there, level we had once before. I think it's like 57 or 56, but we did give it the room to go up to 32.69. Certainly things turned around bullishly for the dollar CAD since then. We'll go and take a look here on the cross rates. We've stayed relatively quiet here. We are seeing the sterling on kind of push a little bit higher, obviously with strength here in the sterling. But you can see here the Kiwi yen continues to remain really weak. We did have Last week, some back-to-back gravestone dojis here, right here. You look at that. I mean, they look more than that when you look at it, but closer. But when you see it in context, you can see the wicks were not long at all. So there was definitely be gravestone dojis, and we did go on and pair back, but the range has been very tight. The pullback that we eased back to relatively tight, and that's the way it's been in FX right now. We've been relatively quiet here. I'm going to go in and take a look here at the guppy. And you can see here, we're just above this 140 area here. I think our buy chart support for today in the guppy is 39.21 with resistance at 40.78. But you can see here, we're just very, very, very tight here. Right there. But as I mentioned, not really a whole lot happening in FX. When we go on to move back into, let's say, the euro, if you look at it on a 30-minute chart, let's go moving right there. You can see here that we have a little hammer, but it's, once again, very tight ranges here. We are holding above that area here, but we have a little hammer bottom, but we'll see. And that coincides about the same thing with the dollar index, running into some minor resistance at 98.41. Support here is at, I believe it's 994 here in the dollar index. So, I mean, in the euro per se. We'll move into the other markets. We did see gold make that dip down here to this 1446-ish area, just about there. We talked about this yesterday. That actually comes in place with, when you look in here after the market had actually come off, doesn't seem like it, but came off $70 to bottom here, 1267. So 1267 to 1558, 38% push at 1447, and there's a support level of 1446. So we talked about this. We thought that we can move a little bit lower and move there. We just about nicked it, but like I said, the market's pretty oversold. We may go in and see some value buying start to emanate here, and maybe we'll see a little bit of a return rally, which could take us potentially back up to 1472. So could see, we're a little bit overdone here on the gold market. Crude oil made another run up here. You can see here, day before yesterday, we had a hanging man. And then yesterday, just a whole lot of nothing. And when I say day before yesterday, on Friday, and then you can see here, we're just hanging on. This market really seems tired. They keep trying to hang on, and they're following SPOOs so closely. I mentioned this in the chat room. You could just see it, and and once the SPOOs tired out, once he tired out right here, you saw the crude oil quickly give in. I was mentioning in the chat room how it's, truly vulnerable. I mean, it moved higher. You can even see, look on here on a 2-hour chart. We've got a nice gravestone doji here. So initial resistance coming in here. It's going to be key, 57.25. It actually comes in even a little bit lower than that. But that's that 57.25 really 30-ish area here. They'd have to get a 2-hour close above that at this point to negate that, and we're just not simply seeing anything here. So once again, to me, it just seems, I think that they've waited and waited, and the market keeps waiting for this China news, China deal, phase 1 deal. Kind of have to wonder at some point, do they just say simply the emperor has no clothes? Because like I said, I could see if we were much lower here, but this market, like the SPOOs, I mean, basically just priced to perfection. Now, I'm not a bear, but I'm just saying is, this market has just gone, look at this. and we still don't have any news. There's just a lot of talk. I think that Trump would like to get a deal, but I think China is hell-bent on saying, no, remove all the tariffs before we sign it. They know he needs a deal. He likes to say they need the deal. I'm not saying that China doesn't, but I'm saying Trump needs it even more so than China. So he's looking for something to take the impeachment news off the front burner, something that he can supposedly lay a big claim to, although it's not the whole deal. It's just phase one. But something he can hang his hat on and say, oh, look what I did. Now, that's not to play politics or be negative or positive, or whatever the case. I'm just saying is that's how I believe the market is looking at it, and why I think is more pressure on Trump to come through. And China, I think they're saying, you know what, we'll hold back. We'll hold back. We know he needs a deal. We need it. That being China, they may be saying they may need the deal. I'm not saying that they don't. They've had some weak numbers, but they know that Trump really needs it as we start to kick off into the election season, as we move into the next year. And also, he would like to have something to take this impeachment news off of the front burner, and he'd make a big deal about it. So like I said, they're hanging tough. And I'm wondering at one point, does the market say, hey, you know what, this isn't really coming around, but they still keep going along. So there you go. That's what we have here. The bunds are still relatively weak overall, which have an inverse relationship. So lower bund prices mean higher yields. And I'm surprised this has not helped the euro. Now, Trump's supposed to announce about the auto tariffs for Europe, and supposedly they're going to put those off for now. I would think that would help the euro, especially with these, higher rates here in the bund. Now, that being said, the U.S. rates, the 10-year, is well up here too. But once again, the euros have been the one that's been in the dirt. But that's all we have for now. Like I said, we started out the week on a very, very quiet session. Yesterday, basically no movement, and things are still relatively quiet in FX, with the exception of the peso. Like I said, I mentioned in the room, 1928, 1932, maybe it stretched to 35, but you have to always be concerned that, Trump likes to talk off the cuff. So my thinking is he may leave some kind of a hint, give the market a bone, support, something like that, but something that would throw the thing that would be kind of look positive that, well, China can do this. I mean, I don't think he'd say we'd like to do something, but he'd say, it's beneficial. They need it. If they can go in and do this and do that, something that we could see the screws pop up real quick, but I don't think it'll last very long. And I really think that the crude is quite vulnerable here. We've spent so much time hanging around and we just simply can't get the deal done. And I'm talking about as far as moving higher in crude. But that's all we have for today. Thanks for joining us here on the FX Daily Roundup, and have a good day trading.